Hi, I'm Victor. I'm an active value investor, and I like sharing my investing journey on YouTube with other individual investors. Today, I wanted to cover Adobe. This is the big software company that focuses on all digital media. It's been a wild success story in this space. It's the leader in digital media. Many creators, websites creators, content creators use Adobe products. And whenever you go to a website or you even watch YouTube, chances are that was produced on Adobe applications. The company has had a recent drop in its share price, yet I don't see any fundamental change in the company. So it's made it more attractive to me. I wanted to reevaluate the company, look at their financials, and then make a determination if I'd like to buy shares or not buy shares. Let me share my analysis with you. I like to follow a process in investing in stocks. And the process involves 4 questions followed by a decision. Do I want to be in the industry? Is the company I'm evaluating operating and performing well? Is debt under 3 times EBITDA? And I want a discount on the stock. Based on those answers, I make a decision whether to buy, hold, or sell a particular stock. So looking at their last full year of closed books, they have some pretty good things going on. They're a $17 billion company, and they're growing at 12%, which is very good. Very profitable company. They produce really good profit. And they've generated a lot of good free cash. I'm going to get to free cash flow in a few slides, but their cash flow is really enables them to repurchase a lot of shares. So what they're doing is they're taking shares off the market and making each individual shareholder own a greater percentage of the company. So that's really good. Adobe gave guidance, and they're going to be about $19 billion in revenue at the end of their next fiscal year, which is about 8% growth if you look at the current year revenue. So that's really good growth, and they aim to be profitable again. The statement of cash flows looks good. If you look at the last 3 years, they've generated more free cash from operations year over year. Very good. And their purchases of property and equipment have revolved around the same number, which is very good, which means they're generating more free cash year after year, which is what I use to value a company. And again, they continue to spend that cash rebuying shares, therefore making each individual shareholder own a greater percentage of the company. I value companies by looking at their future free cash flows and discounting those free cash flows to today's dollars. And Adobe generated $7.4 billion of free cash in 2022. I'm going to use that as my starting point. They've had really good consistent growth, but they're guiding for 8% growth. So I'm going to keep it at 8%, growing years 2, 3, and 4. Long-term growth of 4%. I have a weighted average cost of capital of 8%. Putting those into my model, I calculate that the company is worth $192 billion, but the current market cap has dropped to $166 billion. Therefore, it offers a 30% discount on the stock. Very strong balance sheet. They're at a 0.6 ratio. When I'm looking for 3x or lower, if you compare debt to EBITDA. Adobe is a really successful company. And for a long time, they've just been really delivering results for shareholders. 2022 was pretty much in line with what they've done historically. Profitable revenue growth, really good balance sheet, and they produce good free cash flow. I believe their stock is down 18% from February 2nd based on an acquisition that is going to get pushed back and may not happen. But my valuation is really doesn't take into consideration that acquisition. So it may be an opportunity to jump on this stock. In 2023, they're going to grow at 8%, be profitable, generate free cash. And I believe there's an upside in the stock. This is one of the leaders in digital media. Many creators use their applications. They've been used for 2 decades. So this is a really strong, established company that's going to produce steady growth, profit, and free cash flow. And over time, I believe this is a long-term value play. So looking at the scorecard for Adobe, it's an industry that is an excellent industry to be in. It's growing. It's part of the future. This company is the leader in their particular domain. Debt is way below 3 times EBITDA, and there's a 30% discount on the stock available. Therefore, I'm going to be buying shares of Adobe. Hey, thank you for watching the video. Really appreciate it. I hope you found it interesting. Keep in mind, I'm just sharing my individual investing journey with you. I'm not recommending you buy any particular stock or bond. Good luck investing in 2023.